SABMiller is the world's second biggest brewer by volume and has a market cap of 764.7 billion rand. Headquartered in London, it has more than 200 beer brands in over 75 countries across 6 continents. The group is also one of the world's largest bottlers of Coca-Cola products. It trades on a price-to-earnings ratio of 29.4 and a dividend yield of 1.5%. And look at this share price graph. Daniel, let's get your thoughts first before we cross to Paul in Cape Town.
So I think this graph is telling 2 stories. I think on the one hand, it is a superb company. It's been run very well. It's given very good results recently. On the other hand, I think this talks quite a bit towards what I was saying in the beginning, that in this environment, people are looking for staples, large companies. They can pass through pricing, low elasticity to price increases, high cash generation, dividend payouts, etc.
Paul, let's get your thoughts on SAB. And again, the share price direction, I'm not sure if you can see it down there in the Cape Town studio, but is in a very steep curve upwards.
It's seared into my memory. It starts at the bottom left and goes up to the top right. Look, I mean, beer has many problematic aspects to it too. We know that in certain countries, in certain societies, there is a real problem with alcoholism and many, many social problems attached to drinking excess amounts of beer, particularly in a shebeen type situation in this country. However, this is a story which has been with us since the inception of humankind and is likely to stay there. It doesn't have the same long-term health effects. And here, critically, the companies can upsell into a kind of clear lager drinking lifestyle sort of premiumization. The model works. They can clearly show that people were prepared to pay premium price for premium brands. And I think finally SABMiller now has the brands that it needs, the Snows, the Peronis and all that stuff, to go global and compete head to head with the best of them out there.
Am I still right on the fact that about 80% of revenue for this group is derived in emerging markets?
I'm not sure if it's as high as that, but a significant amount is. I mean, their biggest operating profit contribution comes from LATAM. That's been growing very strongly. AB InBev recently put out quarterly updates that have echoed that sentiment, that area is growing very strongly. They do have exposure to developed markets like the US. That's been taking a bit of strain, but a significant exposure to emerging markets. If I'm correct, I think only one other global player has a higher exposure, which the name escapes me at this point in time.
And I'm going to save you right there. Paul, let's come back to you. Is the emerging market exposure the reason why we're seeing this stock on the rating that it is on at the moment?
Absolutely. Look, I mean, that acquisition of Bavaria in Colombia and the region was an absolute masterstroke because they professionalized the production and the branding and the marketing, and sales just went through the roof. It is a concern to me that Miller, which they bought from Altria back, in the day, has always been a bit of an albatross around their necks. I don't know why they thought Miller would be such a great brand to take globally. But, the fact of the matter is they've got the preeminent position in Africa, preeminent position in Latin America, you could argue, with AB InBev. And China, they've got the preeminent position. We know that in China they have that business Snow and there's all sorts of complications. Margins are very poor, basically non-existent profits, but they've got the dominant position there. They've got those Asian brands like Foster's, Grolsch. They've got Europe tied up, and specifically Eastern Europe. So I think they've got a great suite of assets. They don't need to do any more acquisitions. And I think the market is beginning to realize that the earnings power of the business is that substantial, and that the management teams in place, shareholder dynamics are very solid. They've got Altria with sort of 20-odd%. They've got the Santo Domingo family out of Colombia with 14%. Very well-respected management team, all South Africans.
Paul, I want to bring it back to Daniel in studio. What are the risks to the downside on SABMiller?
So you could always have implementation risk because of the large exposure to emerging markets. You've got the usual risks when you're looking at the liquor and tobacco sector of the very large excise taxes, which could make the product unaffordable or temporarily unaffordable. Usually when you see a massive excise tax increase in one region, you'll see sales in the next year drop off a cliff, but in the year after that they come back. So pretty standard risks. I guess the industry as a whole is going through a consolidation phase. So you have basically everyone trying to buy everyone else or buying pieces of everyone else. There's always the risk that they could follow.
But nobody's going to buy SABMiller at this stage.
Well, there's always a rumor circulating that AB InBev is waiting for the right time.
Is that a possibility in your book, Paul?
I would be surprised. I think the regulatory authorities have sort of gone against the idea of, Beer Inc., one enormous producer that has kind of global dominance. So I think they'll probably sit at this extent. And I think, quite frankly, the other risk that's mindful is that beer becomes a drink of the working classes and that the sort of premium market doesn't want to go there. And there is a bit of a danger of that in the United States. Basically, there's a trend towards craft beer on the one hand and sort of pre-mixed Alco Pop on the other, and then hard tack. And beer seems to have kind of lost its appeal. But I don't see that happening in Europe and in the other regions. So I'm hoping that this thing can defend what has been a fantastic share price movement and could still go even higher.
And you're a lightweight in the beer drinking stakes, aren't you? What is it, three a week?
Well,
3 a week. I think that's what
I'm
you've
very
put on the
happy
table.
that you always point that out. Very happy you always point that out.
Daniel, just your thoughts in terms of BAT, hot or not?
SAB.
SAB, sorry, I'm on the wrong planet today.
So,
SAB, thank you for correcting me.
I believe that it was in the hot stocks portfolio for a while. Unfortunately, it got stopped out.
Also not your recommendation.
It was my recommendation
was
to
your
buy it,
recommendation.
but not to sell it. It got stopped out at a predetermined level.
So you were good on your move to buy.
But so it's run up significantly, and to buy in now as the marginal buy at this higher price, it's obviously not as attractive as it was, because it's not looking cheap anymore. But on the balance of things, I'd say it's still hot.
Paul, why did you let it go?
I know, Daniel's my homeboy. He got it perfectly right. He told us to get into this thing, we did, but like an idiot, I set the stop loss gain, not the stop loss, but take profit gain too low, and it got taken out at 4:30 on the way up. So now, as he says, we're scrambling to get back in, but I think it's not a bad idea. We can do it, we can put it back, and I'll promise I'll make the stop a little bit higher this time.
Hot or not? You said idiot, by the way. You called yourself an idiot. I just want to make sure that we're on the same page. Hot or not on SAB?
Hot for me too.